As you're no doubt aware, the crypto market has had a bit of a rally recently. Is this due to the crypto news that we've been getting lately? Is it due to the macroeconomic happenings? Well, we had great crypto news throughout January, February, and March. And we had news from the pro-crypto government, and still crypto carried on dumping. We had stablecoin bills, we had the crypto reserve currency, Bitcoin reserve, and we had all sort of partnerships with, such as this deal with BlackRock and XRP.
Wall Street is going crazy, launching crypto products like their latest special XRP ETF. This is something that could have never been done before. What's happening with XRP here will happen with many, many more crypto coins.
Reported by Altcoin Daily, and still it carried on dumping. So why is it all of a sudden pumping now? Just take a look at crypto bubbles. Is it because Donald Trump has pulled back from the tariffs? Or is it some great news I don't know about that suddenly made it pump? Or could it be the M2 money supply kicking in? Now, what is the M2 money supply? The M2 money supply is M1 money supply with a little bit extra added on top. What is M1? Coins, bills, bank reserve, demand deposit. But when you add savings, time and small time deposits, certificates of deposits, and money market funds, you get M2. For a more academic type explanation, you need to check out my video, Macro Market Jargon Explained, Part 3, the M2 Global Liquidity, and Quantitative Easing. My point is, the USA is still in QT, that's quantitative tightening, and the plan of the Donald was to push the US and global economy market to the brink, then have the Fed come in to rescue it and introduce QE by lowering interest rate and buying more treasury bonds. The president expected Jerome Powell to lower interest rates.
It's all coming down. The only thing that hasn't come down, but it hasn't gone up much, are interest rates, and we think the Fed should lower the rate.
But he didn't.
We think that it's a perfect time to lower the rate, and would like to see our chairman be early or on time as opposed to late.
When this didn't happen, the chairman decided not to turn on the printing machine. The Donald threw a tantrum, and he decided he was going to sack the chairman of the Fed.
Shortly after markets opened today, Donald Trump called on Powell to cut interest rates and called him a, quote, major loser, end quote.
He says he won't leave even if you ask him to.
Oh, he'll leave. If I ask him to, he'll be out of there. If I want him out, he'll be out of there real fast, believe me.
The market spoke.
Are up, the dollar's down. What some have called the Sell America trade is back in full effect. You have the president blasting the Fed chair yet again, referred to him as a loser. You mix it all up, it's just making the markets uneasy.
And everything tanked.
The market's reacting to Donald Trump's ongoing onslaught of personal attacks and smears on Federal Reserve Chair Jerome Powell. All three major stock indices experiencing major losses today. The Dow Jones down more than 900 points. The cause? The dangerous one-man game of chicken that Donald Trump is playing with the job of the Federal Reserve Chair, Jerome Powell.
However, when the chairman then refused to do what the president said and refused to go, the president then came on and retracted and said,
The press runs away with things. No, I have no intention of firing him. If he doesn't, is it the end? No, it's not. But it would be good timing. It could have taken place earlier. But no, I have no intention to fire him.
Well, he didn't really mean to fire the chairman. He was just saying it, and the press get carried away with all this nonsense. You know how the press are. And then the market rallied again. Those investors who've been in crypto for the last few years will know that the thesis now is that it's not just the halving and the Bitcoin 4-year cycle that makes or creates the bull run. It's also the close correlation to M2 global money supply. Another guy who actually explains this global liquidity and its M2 more clearly is Mac Moss, another macro guy. He does it with his graphs and his technical know-how. And take a look at this clip.
A liquidity tsunami is coming, a $5 trillion wave about to hit Bitcoin and stocks. But right now, they're staring at Trump. They're staring at the tariffs. They're staring at the headlines. But they're missing the real driver behind markets. It's quiet, it's hidden, and it moves prices with a 3-month lag. So we can see that Bitcoin is very similar, except for in this case, it's also much more sensitive because of the liquidity and the overall size. And again, we have the global liquidity in the orange line right here, and we can see how we're ticking up right here, but the Bitcoin price hasn't responded yet. Why? Oh yeah, because there's a 3-month lag. So this right here in January, we'll start to see right here in April. And we already have. We've already gone from about 80 to over 90,000 in just 2 days. So we're starting to see this moving in really, really rapidly. Now we can see this, here's another chart from Raoul Pal, and he shows this in a similar way, but he adjusts it for the lag. So for example, what we have right here in the white line is we have the global liquidity adjusted for a 12-week lag. And then in the green line, we have Bitcoin. And what we can see is that they overlay almost exactly when you adjust it for the 3-month lag. And now that global liquidity is taking off, we expect, or we're seeing already, the Bitcoin price is following it.
Mac Moss there. That was a clear, precise, concise explanation, which even I could understand. Which is like, i.e. when the governments of the OCED, the Organization for Economic Cooperation and Development countries, when they pump cash into the global economy, this aggregates together to pump extra cash into the financial markets. This then gives investors money to go into more risk assets. Colin Talks Crypto also explains rather succinctly what's going on right now with the M2 money supply and crypto.
Hey guys, my name's Colin and this is Colin Talks Crypto. Thank you for joining me. Is this the big blast off that we've been waiting for in global M2 money land? So first of all, I've shown you 2 charts at the same time here. We're going to look at each independently. We have the 78-day offset, and then on the bottom half, we have the 108-day offset. In one scenario, we're basically mid the blast off, and Bitcoin has been making moves that have sort of backed that up recently. This move is becoming larger than the move we saw when Bitcoin made its run up from $60,000 or $58,000 to $109,000. This M2 move, which seems to correlate to Bitcoin's moves, is bigger than that move. So I feel lucky that I got my eye on this chart when I did, because it really does seem like it was the beginning of something huge. If this M2 move wasn't happening, it wouldn't matter, right? So this is the thing that's the predominance of importance. And it does look like we are making some nice moves. Like for example, in 10 more days, if Bitcoin's price just keeps going up and we hit like 95,000 by May, it looks pretty compelling to me at that point that the 78-day offset, give or take a couple days here, is the correct offset. And to those people who get caught up in the weeds, and I'll admit it, I myself got caught up in the weeds there, trying to play which one's best. You know, oh, the 108 is better than the 78. If you don't like this global M2 correlation or you doubt it, that's fine. But just look at the gold chart correlation to Bitcoin and to the global M2. Because actually, the global M2 chart is very similar to the gold chart. So you can dismiss the global M2 chart, but then look at the gold chart. I'm just going to point out those moves like up, down here, this move up, this move up. They mirror each other quite well. Sideways, sideways, and then big up period, big up. Here's a subtop, here's a subtop. Here's it starting to break out almost. Here's gold breaking out. You see gold has front run the global M2. So in a way right now, it's almost as if gold is showing us what's going to happen. Gold was making all-time highs before global M2 was making all-time highs. So you can throw away the global M2 chart if you hate it. If you're a hater, that's fine. But then you have to explain how the gold chart leads and predicts the Bitcoin price, which it also does.
Colin Talks Crypto there. Here we are looking at TradingView's graphic representation of global M2 money supply. Someone or some people must be pumping cash into the system somewhere. I'd say look no further than the rest of the world. Japan, China, who I've just done a video of, Britain, Australia, Canada to some extent, and the EU. Let's not forget Germany, which now is actually going to borrow some money to pay for its military buildup. many thanks to Donald Trump's tariffs. They've been slowly pumping money in different ways that I'm not going to go into now. Most of them, if you look at it, have an aging population. And in order to paper over that growing population, they have to pump some cash in because they don't even have enough money to pay for these people's pension. There's not enough people working. They're going to have to employ and get immigrants to come in from Africa to prepare. And as Raoul Pal says, GDP growth equals population growth plus production growth plus debt growth, and the debt growth papers over the cracks in the GDP. Look, I let him tell you.
The labour force participation rate is a representation of the demographics in the US economy. The US is better than others. Europe has worse demographics, Japan worse, China worse. But this is what drives economies, inflation, and it also drives government debt. This chart is government debt is a function of aging populations. It is there to paste over the cracks. If you remember, GDP growth equals population growth plus productivity growth plus debt growth. Debt growth is the part that is papering over GDP growth. It is filling in the cracks. As debt to GDP increases, it becomes harder and harder to figure out how to finance it. So what comes along is the use of liquidity, which includes the banking sector. But basically, all liquidity is there is to service the government debt. You can see it follows this debt to GDP chart. And here's the chart that drove the everything code. This is the interest payments going forwards. And here is liquidity rising to meet it. This is how you service the massive debts. You pay the interest. You do it via currency debasement. That's what liquidity is. It's a fancy word for currency debasement. And total liquidity is the way that they've been doing it. Perfect 4-year cyclicality. That cyclicality is the debt refinancing cycle. So we're currently coming into autumnal season when you tend to see the main debts roll. So we've got about 9 or 10 trillion of debts to roll this year, and you need a large increase in liquidity. Now, there's various proxies for liquidity. Global liquidity is the important one, but it lags global M2, which is a faster reported series. Global M2 is driven a lot by the dollar, plus all of the private sectors and the government sectors around the world. So we found that these two have been really what matters. It's this global liquidity that pays the global debts. Don't forget, 50% of the entire world's debts are in US dollars, and it's the global cycle.
Raoul Pal there. You need to follow him because he definitely has a clue of where all this is going. And he's been in the crypto market for a long time and has been in the financial system for 30 years, I think. So what am I doing? After all, this is why I started this channel. I'm abiding by Raoul Pal's don't fuck this up thesis, which says no leverage.
No leverage, right? Anybody with leverage being blown up.
No FOMO.
No FOMO. So don't chase the peaks and don't sell at the lows. You need to understand the risk curve.
Get the top three assets. Mine would be Solana, Render, and Ondo Finance and Sui.
Then don't get fleeced. Don't lose control of your tokens by attaching some stupid website. Only have a small DGen bag. Remember when everybody thought that memes were going to be the biggest thing of all time? They've all gone to zero. That's because that's so far out the risk curve. It should be small and it should be there for fun, yet unlikely to make a fortune.
Assets like Brett, Dog with Hat, Virtuals, and Huddle. It also says zoom out and look at the bigger picture and don't panic. Don't panic!
The longer term time horizon is everything. Zoom out, remove the noise.
And definitely ignore the 30% pullbacks like what we've been having recently with Bitcoin.
And most importantly, expect 35% pullbacks frequently in Bitcoin. And that means more in alts. And buy the fucking dip if you can. So those are the rules, so don't fuck this up.
So until next time, this is Alexander F. O'Nileri from Kelly Bomb Crypto, holding tight for the big bull run.